Hey everyone, Coach Investor back to another video for today. This is the second video of this earnings evening. The first one was Teladoc. This video, we're going to go over Nvidia's earnings report. And I'll just say this, there is a reason why the stock has gone up in recent weeks. At the time of making this video, the stock is up another 7%. So yes, valuation-wise, the stock is becoming even more expensive right now. But apparently the market already anticipated something. Now, I'll be honest, some numbers here surprised me more than others, especially with regards to the gaming and the data center segment. So we're going to go have a look at that in just a bit. The video after that will probably be either Lemonade, which actually had a very, very good quarter, but a so-so outlook, or Unity, which had an okay quarter and a bad outlook. Now, that video might follow this one, or it will just be tomorrow. So stay tuned for that. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not. I would really appreciate that. And if you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. So I'll start here with a couple of notes from CEO Mr. Leather Jacket Jensen Huang. So he says here, AI is at an inflection point, setting up for broad adoption reaching into every industry. From startups to major enterprises, we are seeing accelerated interest in the versatility and capabilities of generative AI. We are set to help customers take advantage of breakthroughs in generative AI and large language models, as we've seen with BART, ChatGPT, etc. Our new AI supercomputer with H100 and its transformer engine and Quantum 2 networking fabric is in full production. And this one is what surprised me actually. You'll see why in just a second. Gaming is recovering from the post-pandemic downturn, with gamers enthusiastically embracing the new Ada architecture GPUs with AI neural rendering. Now, why was I surprised with this? Well, if we have a look at our favorite overview here, you can clearly see one thing that I did not expect, which is data center is actually down quarter over quarter, while gaming segment is finally back up quarter over quarter. Professional visualization is also up quarter over quarter. Auto continues the uptrend, which is nice to see. So overall, we've been just over $6 billion, which, by the way, they beat on the earnings per share estimates and revenue as well. Now, let's dig a little bit deeper. So for the sake of this video, I'll just go over the non-GAAP numbers. So revenue increased 2% quarter over quarter, or 21% year over year. As for gross margin, we're now at 66.1%. That's up 10 percentage points quarter over quarter, but down 0.9 percentage points year over year. Operating expenses is down 1% quarter over quarter, but up 23% year over year. When it comes to operating income, we're up a lot, 45% quarter over quarter, but down 40% year over year. Now, as for net income, same story there, up 49% quarter over quarter, but down 35% year over year. Diluted earnings per share as a result of that is 88 cents, so up 52% quarter over quarter, but down 33% year over year. And this might mark, let's say, the beginning of a bottom for the Nvidia business. If we can see an acceleration in that gaming segment, of course, net income, operating income will increase over time, as well as we go back to an Nvidia that we've known before, where gaming continues to grow, as well as data center, as well as professional visualization, especially professional visualization, as they increase that, let's say, subscriber base. They've talked about the subscription when it comes to software. If that becomes, let's say, throughout this decade, a larger part of the business, it's obviously going to be excellent for investors and analysts as well, easier to model. And then when it comes to revenue per market platform, so data center is down 6% quarter over quarter, but up 11% year over year. When it comes to gaming, that's up 16% quarter over quarter, and of course down a lot, 46% year over year. Same story a bit for professional visualization. It's up 13% quarter over quarter, but down 65% year over year. Automotive continues its positive trend, up 17% quarter over quarter and up 135% year over year. And so revenue overall quarter over quarter is up 2%, or year over year 21%, as we've seen before. But if you want a bit more information about why each segment has increased or decreased, let's go and look at that. So they talk about data center right here. So the year-on-year increase for the quarter was driven by US cloud service providers, while the year-on-year and sequential quarter changes also reflect reduced sales in China. The fiscal year increase was led by strong growth from hyperscale customers and also reflects purchases made by several CSP, so cloud service provider partners, to support multi-year cloud service agreements for our new Nvidia AI cloud service offering and our research and development activities. Now, when it comes to gaming, they say here the sequential increase was driven by the ramp of our new GeForce RTX GPUs based on the Ada Lovelace architecture, partially offset by lower shipments of SoC system-on chips for game consoles. Now, as for professional visualization, they say here the sequential increase was driven by desktop workstation GPUs. When it comes to automotive, not much to add there. We all know why this segment is increasing, but let's read it nonetheless. The increases reflect growth in sales of self-driving solutions, computing solutions for electric vehicle makers, and strength in sales of AI cockpit solutions. The increase also included growth in automotive development arrangements. So, of course, with the EV revolution, expect this segment again to continue to grow. Now, when it comes to the obviously GAAP operating expenses, that is up 27% year over year and flat sequentially. They say here the year-on-year increase for the quarter reflects compensation and data center infrastructure. Fiscal year GAAP operating expenses, which included a $1.35 billion acquisition termination charge related to the ARM transaction, were up 50% from a year ago. The fiscal year increase also reflects compensation, data center infrastructure, and engineering development costs. So that's basically the main reason. And now last thing when it comes to the outlook, so they expect revenue to be $6.5 billion plus minus 2%. GAAP and non-GAAP gross margin are expected to be 64.1% and 66.5% respectively. So basically what they are expecting is revenue to be up quarter over quarter as well, which again is great, especially in the current market environment. And maybe that's why the stock has gone up in the last couple of weeks and why it's still up after hours, because maybe we've reached, let's say, bottom Nvidia's business across the board. It surely looks like it, right? We went from under $6 billion in revenue to now just over $6 billion, and now they expect to be at $6.5 billion in the next quarter. Margin still pretty high, Nvidia standards. So again, great quarter, great execution. What a beast of a company. So to conclude, let's be honest, there's not really much to add here. Again, I'll repeat the same thing. It's a very expensive company based on traditional valuations, but it just showed you that, well, it's the best in the business. It's the best in the business, and if you want to own the best in the business, well, apparently you have to pay a premium. Are you willing to pay the premium right now? Maybe you're already holding for years and years. Let me know down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.